Hello, everyone. Welcome to today's session. Let's get underway here. Um, Market conditions having a real big move today. We got CPI numbers, which is the consumer price index numbers coming down, which the market obviously is loving that. Pretty big rally today. So we'll talk about that. Also bonds and where we're at currently and where things could go here in the shorter term. Overall uptrend, let me grab my drawing tool. And this overall uptrend and retracement, it's been an interesting process to ride through when we deal with an uptrend and a counter trend. And then this counter trend move starts to play with our minds a little bit on, oh boy, especially when we've just gone through something like this. We've just gone through a downturn or a bear market, and maybe some trades didn't work, or we over traded, or we under traded, or we just sat on our hands, or whatever the scenario might be. Oftentimes a pullback like this gives us a little bit of that once bitten, twice shy scenario where we're like, oh boy, should we buy into this uptrend? And that's always going to happen. There's always going to be something that makes us feel off slightly, because we're betting on the future. We're betting on an unknown, and that a lot of times plays with our head to where we're like, I don't know. I need to see out in front of me. I need some certainty, and our human triggers start going haywire when we need some certainty, and it's impossible to get certainty in this game. So if you're experiencing that and feeling that and going through that, it's a natural feeling with trading. It's probably a natural feeling with anything that has a bet on the future, and the future is uncertain, or trying to create as much certainty as possible. The certainty comes from our money management. The certainty doesn't come from the outcome. The certainty doesn't come from what we want to have happen. The certainty comes from the way we set things up and the way we start and finish, whether it's a winner or a loser. And so having a methodology and a system to be able to create certainty, at least part of some certainty in a game that's entirely uncertain, then that's a part of the money management. If that's not in place, then oftentimes what we end up doing is we just close our eyes, or we don't open our statement, or we're like, oh boy, I don't even want to mess with that right now. I don't even want to fiddle around with learning this or that, or understanding this or that. I'm just going to forget about it. And so we do that, and then we come back, and then we get, it's this ebb and flow of creating some routines and creating a part of some certainty that we can at least have some control over, a part of our process and our routine. So TradersPro is designed to help add into some of that, add into some of this of the routine, not necessarily creating certainty, but creating a routine that allows you to have some certainty in your process. And so when we start with that, and we're looking for an overall market direction, an overall thesis. This first chart is just a quick glance of that thesis. It's not meant to be anything more than a quick glance. I can quickly glance at this and I can see a whole lot of information. Number one, I know that we're at the top of the trend. Number two, I know that on this time frame, which is a 1 year time frame, that we've hit a very wide extreme in that trend. I also know that we have been to a wide extreme on the other side. And I also know that we're trending this direction. And I also know the context to this current trend. Here we are in relation to where we've been over the last 20 years. So this is a 20-year time frame. This is a 1 year time frame. And that's all it's designed to do. It's designed to help us determine where are we at in this overall market cycle, and the overall conditions of the market currently. We're not early in the trend. We're also not late in the trend, but we are coming out aggressively out of a retracement of an overall uptrend and starting to move back this direction. Okay, so that's really what this is designed to do, is just give us that quick glance, that 30,000 foot view of what's happening. Then we can move down. We could even ignore this if we wanted to, if it's confusing us, and if it's not adding to the routine, we can ignore it. But there's some value in this overall process of looking for what do we want to see. This sentiment, this short-term signal is designed to show us three things: sentiment, breadth, and momentum. Each are different, and each have a different interpretation. Number one, sentiment. Sentiment is built around, in this case, this sentiment is built around volatility and risk. It's kind of tied to the VIX, to where we're looking for a very low lack of put buying. We're looking for a very small amount of fear in the market, and historically, put buying and selling does a good job of that. And essentially, what the VIX does is it's telling you the amount of extrinsic value in the S&P 500 put option. So as you get more and more fear and more volatility in that downside, the extrinsic value in puts start to spike. So in this case, it's when it's dropping, when that fear is dropping and complacency is rising. I wouldn't even think of it as complacency is rising. I would think of it as fear is diminishing. Okay, you can see how aggressively the fear has been diminishing. So when we're seeing this line starting to climb, that's what that's telling us. That blue line is saying, is there a lot of fear in the market? No. At some point, that's going to play against us. That's going to be a contrarian type indicator to say there is not a soul that is scared in this market. Okay, that's the very time to start to get scared of the market, typically right at the very top of a market trend or something like that. So, but this can stay up in this upper range for a long time. 2018, 19, all the way up to 2020. This 2.5-3 years in a row, it was all the way up in this upper range for a long time. That's good. That's what we want. We don't want to see continued fear in the market. But at some point, and as momentum traders and trend followers, we want to see this. We want to see this blue line as high as possible for as long as possible, because that means that there's buying. It's risk on. Everybody's jumping back into the market. Buy the dip mentality. That's our direction. So when we're looking at this blue line, this sentiment line, we want to see it at the top of the chart, and we want to see it moving higher. During a downturn like this, it's not surprising to see it retrace back a little bit, because it's like, oh boy, are we getting fear in the market, and are we getting a spike in that put buying in the S&P 500? So in this case, we want to see it here. Typically, when we start to get to a market top, momentum will overtake this, like this back here. Momentum will start to trade above this line. And that's when we know that we need to start looking for at least a pause or a reversal, or potentially even an entire market turn as this starts to happen, as momentum starts to climb. And then we start to get these type of formations right here, when we're getting all of these kind of towards the upper range. And there's a little setting right here. I won't get into that today, but momentum will lead and breadth will follow and create some divergence. You can't see it right back here, but typically momentum will lead, momentum starts to turn down, breadth starts to follow. Okay, and that's typically an area where we start to see a reversal, but it's usually a lot higher. So here's our issue right now. We've got breadth still down here. We've got momentum leading, and we've got the sentiment leading. This should still be a good condition for more upside, and because we're still not overbought on momentum, we could see that was a straight line up. We could see some pause and some consolidation, especially after a big move today. But that's a little bit in terms of looking for and glancing at this chart and saying, what are the market conditions? Well, those market conditions are they're all still pretty wide, and they're all still kind of catching up, and they're all still trying to react to this news and this overall market rally. And that's the scenario that we're in. We also are seeing, as of yesterday, we're seeing buy sell ratio, which is also kind of tied to that breadth. The breadth has not moved aggressively. This has not moved aggressively with this rally. It did off the bottom, but then it's kind of stuck right here. Today, I think, is going to push that higher, and we'll look at that. So let's look at S&P 500. Let's look at kind of the market conditions, market ETFs. S&P 500, we've got just this big, huge move today. So we've now pushed us up into this extreme momentum range, which from here, we start to run into an unsustainable trend. It can go higher, but anytime we're in this upper box here, notice this says reversal risk. This isn't the kind of reversal risk that's saying, oh, party's over, all the way back down again. What this is saying is this is an unsustainable level of trend, and it's going to end up working itself back into this box. Okay, and so we end up with the momentum moving back the other direction, and we end up with just a pause or a consolidation or potentially a retracement back down after a big run up like this. We'll see. We could get a gap like this that never looks back. The market, it's been so pent up and so waiting for these numbers and so waiting for any reaction to bonds, any reaction to inflation, anything at all. And so I think that the inkling, you had the heavy hitters and the institutional guys that started realizing, hey, this is it. Fed's probably done, because we had some reaction to bonds as well. If we take a look at that, when we look at bonds here with the TLT, we're seeing a nice gap in bonds. We also started to see bonds starting to move, at least stabilizing back here. Now we're in this upper range. We've got this upper momentum range, or excuse me, this lower momentum range. When we're dealing with the downside, it works just like the upside. When we have an upside and then we have that upper momentum range, the downside, we have this lower momentum range where it'll bounce. We've now broken through that, and so now we're climbing this ladder of resistance. This is all overhead resistance, meaning it's a ceiling. Okay, there's going to be some reaction at these levels, but the bond market now is starting to find support, working its way towards this next level. Now the next test for this is going to see if we can close up above this 90.71. If we can get up above that level, then even more solid. We're also up in this upper range. So all good things, all bullish still at this point moving forward, and that's what we ultimately want to see. We're also seeing, let's see if we saw the Russell bounce here. There we go. That's what we wanted to see. Russell, now we're really getting everybody participating. Russell is lagging. Russell 2000 stocks, these are small cap stocks, which are typically considered the most risky stocks and the most volatile. Theoretically, sometimes that pans out. It's not always the case, but it's a smaller companies are less stable. Their earnings may be more volatile. Their business sector may be more volatile, and so they tend to lead in really bullish markets, and they tend to lead both ways, lead the upside and lead the downside. So this one has had some catching up to do and is looking like it's working that way today, back up into the bullish trend momentum location, or the bullish trend. It's not momentum yet because it's still in a downtrend based on the 6-month time frame, but that's also bullish for the market. And then we're seeing this volatility continue to drop back down again. That's also what we want to see for bull markets, and you can see how aggressive this has started to move. It's also oversold. Markets were overbought. So this day today, don't be surprised for really mild follow through from here, but we're now back in bullish conditions to be buying the dips, buying the breakouts, buying things that are moving higher, and that's ultimately what we want to do. What we should have been doing and have been doing is continue. In this case, we had a couple strategies, portfolio strategies, building those out over time during this retracement. We'll talk about that a little bit more on Thursday, but that's also, now you're going to see your muscle stocks that are really going to start to crank here as well. And we've got a leader here, AAY. This was a big runner here. This was up like 500% from here to here. It retraced that, started to move right here, got this bullish upward trend, retraced right at that 618, and now it's getting this little pop higher. Nice move. I think it was 17% yesterday, another 11% today. It's in that electronic semiconductor space. Oversold now, but these are stocks, here's the first buy signal to be adding into. In fact, I think I have that in both portfolios now. Let's see if I ended up getting it in here. I might have missed that one. I did get it for sure in this one. In the new buy daily, that was AAOI. So it's up 26% from just that initial buy point right here. That was the first buy and the leading buy because it had a really high rank. Remember that the rank is going to encompass 12 months. So it's including when you have a stock that's had a big run up like this and have these huge returns, 480% year to date, and then it retraces that. It doesn't knock this out. The rank doesn't knock down too much. In fact, you can mouse over here on this box. I can mouse over and watch this number right here. Okay, I'm gonna just draw a little arrow next to rank right here. Okay, now as I'm moving my mouse, watch that number, 98, 99, 98. So it was a leader here. And even during this retracement, it didn't give back much because it was such a strong stock to begin with. So this can be a little bit dangerous because it drops 50% from 15 all the way back down again. But it's still the kind of stuff, it's still a high ranking stock that's now getting a new buy signal. Okay, so and as even in this overall uptrend, it went from a rank of 30 to 90, and then it was immediately up in this 90 range. So when a stock can bump and it jumps up into those higher ranks, those 90 ranks, those are the ones to be focusing on. Anything less than that is, there may be some opportunities there, but anything less than that is not really going to give us that octane that we need. We want some stocks that are going to move. I don't want to just sit around and wait for Coca-Cola to do its thing. We want some stocks that can move 100, 200, 400, 500% within an overall trend. And understanding that there is a risk-reward relationship, obviously, and the risk is the timing, the risk is the volatility. So we always have to be focused on that piece that we can control, and that is our money management, how we're adjusting our stop losses forward. And that's always geared towards risk. The return, the reward is going to come, or it's not going to come. We just don't, there's no idea. We have no idea what it's going to do, but what we can control is our risk level. So let me touch on that just briefly while we're on a stock like this, because let's say that we had a scenario where this was moving higher, it's up in the upper momentum zone. We have a buy signal right here, and we say, okay, it's a high ranked stock with a new buy. It very well could break out. Market conditions at this point, though, we're starting, let's see, what's the date right here? The date is August 30th. Let me come over here. I'm actually going to come back to buy sell ratio on August 30th and see. So buy sell ratio on the 30th was still right here. So we had already started to sell off. We'd already started to sell off and we had this. So in that case, I may, depending on my strategy, again, I may say, I don't know if I want to buy in, or I need to understand that we have a buy sell ratio of less than 1. So if I'm going to buy into this, I need to make sure that my risk is well defined. Let's say that I set my initial stop loss right here. I always want to have a stop loss in place on that initial capital, that initial trade that goes in, because I don't want to wait and see. In this case, it's so volatile, we may get a sell signal way down here, and that's going to be a big blow early on. So I want to make sure I've got confirmation, I've got support, and then I can adjust my stop loss. Whether it's here or whether you decide it's here, you can decide, but then it just isn't, it's a trade scenario in terms of my money management and my risk management. So let's look at that. Let's say, okay, I wanted, these numbers might be a little bit off, but let's see if I can pull that in and say, let's do that 100,000 portfolio. In this case, the current value is pulling in today's current value versus this current value, but let's say it was at 15 and I was buying it at $15, and my stop price is going to be right down here at this low of, that's 1281. Let's go 1250. So if I go 1250, now I'm going to plug in the shares and say, okay, I know that 100 shares is 1500. That is 2.4% of my portfolio at risk, or $250 of my 100,000 is at risk with that setup. Is that enough? Is that too much? Is it too little? My position size here is 1,500, which is relatively small. That's only 1.5% allocation. So I could go up slightly. If I went up to my 2.5%, then now I'm at a $3,000, so I'm at 3% allocation. I've got stop loss the same. I'm at 500 at risk. That's 0.48. And say, let's just say for this example, that's fine. I'm fine with that. Okay, and my risk is in place. Now I know what I'm dealing with. It's like, okay, it's either going to go up or it's going to go down. If it goes up, I continue to stay in it. And if I adjust my stop loss higher and higher and higher, I stay in that until it retraces. I'm analyzing that and reevaluating it each day. Then from here, I can go in and say, all right, well, let's see what ended up happening. I'm not going to add it in here, but then we have a day. Okay, it reverses immediately. And then it reverses, bam, we're stopped out. Now, in this case, would we say, oh, gosh, dang it, that stunk. I'm such an idiot. I'm not gonna, never trading stocks again. This stock's a piece of garbage. This software is a piece of garbage. Like whatever it is that we're blaming the stock because that's what we do, right? But we have no control over what it does. We want to think we do. We want to think we're smart, and that what we do is going to control the market, but it just doesn't work that way. So what we have control over is where our risk is. We set it up based on a setup, a pattern. Market conditions were not ideal. Buy sell ratio was less than 1. Maybe I shouldn't have taken the trade. Maybe next time I won't. These are things that you can build out your trading plan as well and say, I didn't like that. Didn't like how that felt. Well, figure out a scenario that is okay, because you're going to have losses. It's just a part of trading, but they should never ever be a big blow, and it should never be a scenario where it's like, oh my gosh, why did I? It should just simply be, I'm down 250, dang it. But you should pat yourself on the back and say, I got stopped out. I stuck to my plan. I'm down 250. I knew that was my risk, and way to go. Way to go for sticking to that plan. Because in this case, it falls off the table, right? Just completely gets obliterated. Now we're all the way down here. We're still in an uptrend. We're down in that 618. Once we get to that 50618 area, now we're starting to watch for price activity. We're starting to watch to see what's happening. And look what's happening. We get a 3-part counter trend. We're getting lots of support. We want a little bit of confirmation, proof that this thing is going to move back up again. And we get maybe a day or two. You can see it's just not doing anything. Then we got 2 days that started to move up here. Let me go to this perspective here. So now we've got a couple of up days. And we got another one here. Now we could say, okay, I got stopped out back here. It was red the entire time down. And I think this maybe turned to yellow. So maybe you decided I'm going to take another trade there. But remember, buy sell ratio was still negative, or buy sell ratio was still less than 1. So even for the muscle stocks, ideally, buy sell ratios for the highest probability setup, if it's above 1 and the market conditions are good, these are going to work out just a whole lot better. Okay, and so now it's turned the corner and gone back up, and now it's really starting to rocket higher. So that's kind of a scenario to be, oh, I bought a breakout stock. I thought it was a momentum trade. Oh, trend following is garbage. Momentum trading is garbage. I should have been buying the pullback, the retracement. As I've mentioned before, the term you can should all over yourself, because we have 2020 hindsight, especially in trading. We don't have 2020 foresight, and so it's just about creating something that is sustainable and systematic for you to be able to follow, and then diversify out across multiple trades and multiple ideas, because ultimately you're going to get 1 or 2 or 3 of these that just take off, and you're not going to know which one it is, and it may sometimes be surprising. So for example, in the portfolio currently, the sell to buy portfolio there's 1 or 2. This one's up 47%. And it started as a pretty deep retracement here as well. Remember, the strategy on this one is buying the first buy signal after a sell signal on a highly ranked stock. This was highly ranked because of that, so it may not deserve that. You know, and again, you can do this with any of the scans that you desire, any of the scans that you want. Set it up and say, I'm only going to do it on my dividend stocks. I'm going to set this up. I'm going to have whatever my scan is, my criteria. You know, this one all green up, not extreme. So now I know these are the kind of names that I'm going to be choosing from here, and I'm just simply waiting. This, I don't think I have this one as a signal. It's just all of them. Versus I can set that up. I can set the screen up and say, okay, on this screen right here, right now I've got it as a buy, but I do want it to set it to a hold to buy. I want a signal shift on this with all of these settings, and let's see if it pulls anything in there. So there actually are. So even on this setting, the ranks are still above 90. You can still focus on those. AMRX, let's take a look at that and see. So now I've got a $4 drug stock. The fundamentals on this thing are going to be good. 40s, 6 and 3. Those are, I think I just have them. Actually, I do just have them set up as 1. So, but it's all green and it's in that upper momentum zone. And here's my buy signal. If that's the scan that I'm pulling my stocks from, then that's the one I'm pulling from. And it's got the criteria, and you can decide and say, oh, it's there's no dividend on these. Let me go back in. It's going to reset this, pulls it back to that original setting. I would have to resave that to have it either as an updated or a new scan. So if I make a setting change here and I change it to this, and it pulls up a group of stocks, I would need to save, update this screen, or create a new one under that setting if I wanted it. Otherwise, when I go back, it changes the setting back as well. So here are the, what was I going to look at? Oh yeah, dividends. Let's see if any of these have a dividend of, let's say 2. Now let's say 1. Any of these have a dividend of 1, and they have gone from a hold to a buy. Got a couple there: Primerica, OSK, PRI. So, you know, not a super clean pattern on that. If I go back, I think, oh, it's still there. Good. See if any of these others look any better. No, not bad though. Pulling off an ABC pattern. OSK off of its steep retracement pattern here, 618, working its way back up. It's now look at how some of these ranges work. If I get rid of this signal and I pull in this setup here, get rid of that guy and go here to here. Oop. That was not what I wanted. Oh, that was what I wanted. Now you've got this range, okay, and this range. Once it's broken out of it, now it's running into this range. So it's almost back up into that momentum zone. A retest, if it were pulling back, where would I expect it to find support? I would expect it to find support at this area, somewhere inside of here. So if it's like, I don't want to buy it quite yet because it's extreme, let me wait for it to pull back and see if I can get it to pull back into a support zone, and then maybe give me, you know, once it's back to that support range, give me a confirmation bar back up again. So you can also add some of these into a watch list. The other thing too is this is a 72 rank, so I may say, yeah, okay, it's got a dividend, yeah, it's got all that, but and that's okay. It's performing okay, but is there something else that may be a little bit higher performer for me to add into my scan? But just the point of, you can create any scenario that you want, and these are all just predefined. You just all have a really basic setting set up here. If you want your own, you just go in, set that up, and then you're set. You're ready to roll. Whether it's muscle minis, these are just going to be lower price stocks. Okay, look at the price action here. You've got some interesting ones here as well. This actually, basic material mining, these stocks are really compelling still right here. And there's quite a few. In fact, what was the stock? I noticed it in the portfolio last night, and it was a uranium stock. I think it was UEC. There it was. Just got rid of it there. UEC right here. So UEC is a great example of just kind of churning its way higher above that momentum zone. It's worked its way here, retraced, rallied, retraced, found some support. Now it's working its way up. Now it's grabbed a new high. Okay, and what I mean by it's grabbed a new high is on this time frame, this is the highest point because this red line, which is this Fibonacci snap tool, has snapped to it. It's connected to that point and this point. So now it's essentially resetting this low point, and it'll continue to drag that higher as it moves along. All right, let me just go back here just for some summary. Today, I mostly wanted to talk about some of those mechanics of trade management and process to be what you're looking for, the direction of a stock that you're looking for, and then understanding the risk profile, the risk parameter that you're setting up, the number of shares and the stop loss location, so that your position size and your stop losses are 100% controlled by you. The only thing you don't control is a gap lower, right? Let's say I have a stop loss that's here, and these guys come out and say, you know, I don't know. There was an example of this with, I think it was Hawaiian Energy when the Maui fires took off. You know, that was a black swan. That was entirely unprecedented, and that stock was in utility stock, I believe, just got decimated. So a gap lower because of crazy weird news or an earnings report or an FDA issue or something like that, those gaps, that's another reason to keep the position size in check, because that's just one of those risk factors that is outside of our control, is a gap lower based on geopolitical events or natural disasters, you know, terrorist attacks, wars, things like that. And stocks will certainly react to some of those things. So market conditions are looking really good right here. Build out those watch lists. Look for some stocks that are high, you know, they're highly ranked, they're moving well, they're not extreme, they're maybe still in that buy zone, and some opportunities for some more upside there. I'm going to end on that note. Thanks everyone so much for your time and effort, and we'll see you next time. Bye now.